We have some great news for Taiwan Semiconductor stock investors. The company reported August sales numbers that demonstrated robust year-over-year growth. Of course, TSM is benefiting from the rising effectiveness of artificial intelligence, as it is the primary manufacturer of NVIDIA's products. And it also serves companies like Apple and AMD. In this brief video, I'll look into the details of the latest sales report, and as a bonus, I'll update my rating of TSM stock and let you know if I think it's a buy, hold, or a sell. So let's zoom into the details. Hey everyone, I wanted to take a moment to thank the sponsor of this video. Mumu is a trading platform that allows individuals to buy and sell stocks and other investments. I posted the link to Mumu in the description below. If you use that link to sign up to Mumu, it'll help support my channel, but more importantly, you can get special incentives for using my link, including up to extra 10 free stocks. All right, so on September 10th, Taiwan Semiconductor reported sales which increased 33% from August of 2023. Revenue from January through August of 2024 is up 31% compared to the same period in 2023. That's robust growth for a company like Taiwan Semiconductor Manufacturing. Of course, this sales growth means even more because Taiwan Semiconductor's business is so profitable. Let me share that with you here. If you look at the company's 10-year history of operating profit margin in a trailing 12-month period, you'll notice a phenomenally profitable company. In the most recent period, 42% operating profit margin. That's a really good number, especially for a company that's primarily a manufacturing company. It's not a software company. You see these profit margins from software companies, but not very common for a manufacturing company to generate this level of operating profit margin. It demonstrates the skill Taiwan Semiconductor has developed in becoming its own semiconductor foundry business. It doesn't create its own branded products. It only manufactures those products that its customers request, its customers design. And so that creates a more favorable position between itself and its customers, and that more favorable position has allowed Taiwan Semiconductor to scale up large enough to drive down unit costs and therefore be able to generate these levels of profit margins, which also have been improving over the last decade. It used to be 38% in 2015. Now it's up to 42%, and this is at the bottom of its cyclical downturn here. I wouldn't be surprised if over the next 18 months, its operating profit margin approaches 50%. Additionally, Taiwan Semiconductor, in its latest quarterly conference call with Wall Street analysts, hinted that it might be raising prices to its customers. Now, those are just rumors, and those are just inferences that I made from the company's recent conference call, from my evaluation of what management was saying and what they were talking about. I concluded that it's probably going to raise prices because the company has improved what it's offering the customers, and the customers like NVIDIA and others are generating such high profit margins that there is room for Taiwan Semiconductor to raise its price, and the customers can comfortably absorb that price increase. Now, Taiwan Semiconductor stock is down 15% off its highs earlier this year. In fact, just 1 month ago in July, the company's stock price was much higher, and it's traded down since then. Semiconductor stocks overall in the last month or two have hit a sort of wall, a sort of ceiling, as investors have become more cautious about AI stocks. They might be feeling like the stocks have increased too much too fast, and that's why they've been taking a more cautious approach to AI stocks. I haven't seen much reason for caution, and I've reiterated my recommendations for these stocks. In fact, for Taiwan Semiconductor stock, I've had this stock rated as a buy all year long, and I last updated that recommendation on July 18th, reiterating that I felt the stock is an excellent stock to buy on that date. Now, Taiwan Semiconductor stock is trading at a forward price to earnings of 19.34, which for a company of its prospects should be trading at a much higher valuation. Still, the company is exposed to the geopolitical risks between China and Taiwan, And that's the primary factor that has Taiwan Semiconductor stock trading at a lower valuation. If this company was based in the US, the valuation would be, 50% higher, 25% higher at the very least. But because of that geopolitical risk, it's trading at this depressed valuation. So if you're concerned about that geopolitical risk, you can rest assured because it's already, in my opinion, included in the valuation. This stock would be much more expensive if it didn't have that risk. So investors are pricing this stock with that risk in mind. So that risk is included in this valuation. So to update what I think Taiwan Semiconductor stock is it a buy, hold, or a sell? I'm keeping it rated as a buy, and this latest update with strong sales just reiterates my confidence in Taiwan Semiconductor stock. Every data point I'm seeing with AI businesses continues to demonstrate robust demand. In fact, I just evaluated Oracle's results that came out yesterday, and the company reported 50% growth in orders for its service. And I'm seeing that across the board where businesses continue spending on AI. Taiwan Semiconductor is in a great position to benefit from that increased spending. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.